Okay, let's unpack this. We are diving into a really detailed set of sources today, and they lay out this massive contradiction in the crypto market.
It's a fascinating one. We're calling it the XRP price paradox.
The XRP price paradox. I like that. Because on one hand, you have this undeniably weak price action, but on the other, the foundational news, the institutional stuff, has never been stronger.
Exactly. It's a complete disconnect.
And that's our mission today. We're trying to figure out which force wins here, at least in the short term. Is it the market mechanics or the fundamental good news? We're going to synthesize these really alarming technical signals with some huge institutional adoption data.
Yeah, to really understand why the ecosystem seems to be mooning while the price is, well, dumping.
This should give you a few aha moments, especially if you're tracking how institutional money is actually moving in the crypto space.
So we have to start with the success story, right? Because if you only looked at a price chart, you'd think Ripple was in serious trouble.
But that's not the case at all.
Not even close. The company has just locked in some huge fundamental wins.
So let's get into the data. What specific milestones are we talking about? Because the scale of this adoption is what makes the price action so weird.
Well, the biggest story, hands down, is the launch of the first U.S.-listed XRP ETF, the Canary XRPC.
Right, and this isn't just a small thing. This is a huge green light for traditional capital.
A massive one. And the debut numbers, they were honestly record-breaking.
Tell us about them.
Our sources show $58 million in day one volume. $58 million. That's the highest ETF debut of the entire year.
Wow. And it's not just a one-day spike.
No, that's the crucial part. The assets under management, the AUM, hit $248 million in just a matter of days.
$250 million just flowing in. And on top of that, we're also seeing this huge expansion from Ripple itself with their stablecoin.
Yes, RLUSD. Their own U.S. dollar-backed stablecoin. It's already blasted past a $1 billion market cap.
So you have all this institutional confidence, this utility, but then there's the price.
And that is the unavoidable contradiction. Despite that $248 million influx, despite the billion-dollar stablecoin, the XRP price is down hard.
And from a high of what, 366?
From 366 down to around 226, and it is just stuck in this relentless multi-month downtrend.
So this is what we need to resolve. For you, the listener, you're watching a high-stakes tug-of-war. And right now, the technical charts, they are telling a very different and, frankly, a much more painful story.
They really are. If we just look at the charts, just the pure price action from the source material, the signals are overwhelmingly bearish.
Okay, let's get into it then. Walk us through them. What are the main warning signs here?
So there are about 4 key signs of trend deterioration. The first, and maybe the clearest, is the overall bearish structure.
Meaning what exactly? For someone maybe not staring at charts all day.
It just means you see this consistent pattern of lower highs and then lower lows. So every time the bulls try to rally, they fail at a lower point than before. And then the bears come in and push the price below the previous bottom.
So step by step, it's just losing ground.
Exactly. And then you have the big one. The charts have confirmed a death cross.
The death cross. Always sounds so final, doesn't it?
It's a major signal. It's when the 50-day moving average, which, tracks short-term momentum, crosses below the 200-day average, the long-term trend.
And what that's basically saying is that the recent selling pressure is so strong, it's now dragging down the entire long-term picture.
Precisely. And historically, this is not a good sign. Our sources show that for assets like XRP and Bitcoin, maybe 70 to 80% of death crosses lead to more downside. It's a sign that the smart money is de-risking.
And there's more. We've also got a classic reversal pattern forming.
We do, a head and shoulders pattern. And you can kind of picture it, right? A peak, then a higher peak, then a lower peak.
The left shoulder to head, the right shoulder.
Right. And the key here is that the right shoulder is forming below major resistance, which suggests the sellers have wrestled back control and are aiming for a pretty significant breakdown.
And finally, you mentioned its lost key support levels, things like the Fib retracement and the super trend indicator. What does losing those levels mean in simple terms?
It means the safety nets are gone. The Fib level is a point where buyers usually step in to defend the price. The super trend indicator basically tells you the main direction. When you lose both, well, those former support levels now become resistance. They become a ceiling.
Okay, hold on. Wait a minute. You're telling me the charts are flashing all these historic warning signs, the death cross, all of it, at the exact same time that $250 million is flowing into an ETF for this asset.
Yes.
How does that make any sense? How can we trust these lagging indicators when smart money is clearly buying in big?
That is the multi-million-dollar question, isn't it? And it brings us right to the why. Why is this happening?
Let's hear it.
Well, the first major factor is a classic case of a sell the news event.
Ugh. The old buy the rumor, sell the news. We've all been burned by that one.
Everyone has. The ETF launch, it wasn't a surprise. It was expected. It was telegraphed for months. So the speculators who bought in early, the moment the news became official, they just took their profits.
And that selling pressure just overwhelms the initial inflows.
It does. And we've seen this play out before, right? The sources remind us that when the first Bitcoin ETFs were approved, BTC didn't pump right away. It actually took months for that momentum to build.
Same with Ethereum. I remember that. It dropped after its ETF launch.
Dropped right after.
Yeah.
So this is just market routine. The second reason is simpler. The broader market is crashing.
Right. You can't ignore the macro when Bitcoin sneezes.
The whole market catches a cold. Bitcoin fell below $96,000 recently. The total crypto market cap dropped by $1 trillion. When that happens, altcoins like XRP almost always bleed harder.
And layered on top of all of that is the good old Federal Reserve fear.
That's the biggest macro headwind. The Fed is signaling fewer rate cuts. That makes bonds more attractive. It tightens up liquidity, and investors they pull back from risk.
It creates a risk-off environment, and crypto is pretty high on the risk curve.
Exactly. So investors pull money out, regardless of how good the individual news for one asset is.
Okay, and the final point. Even with that amazing debut, the ETF flows aren't enough yet.
Right. That's key. While $248 million in AUM is incredibly strong, I mean, for context, that's like 45% of the Solana ETF's total AUM.
That's a great stat.
It is, but it's not yet market moving when you compare it to XRP's total market cap of, $151 billion. It takes months, not days, for institutional flows to really build up and change the price structure.
Okay, so we've covered the short-term pain, the headwinds. Now we have to balance the conversation. Let's pivot to the long-term picture, because the underlying utility growth seems fundamentally very strong.
Exceptionally strong. I mean, first, just the institutional validation alone. The Canary XRP ETF is a game changer. It establishes XRP as a legitimate institutional asset, and the launch crushed all the initial expectations.
And Ripple's own ecosystem is growing. It's becoming more than just a payments token.
So much more. The success of the RLUSD stablecoin hitting that $1 billion market cap, that shows Ripple is building a full financial infrastructure layer. They control the settlement token with XRP, a stablecoin with RLUSD. It's a whole ecosystem.
That diversification is huge. And we can't forget the biggest win of all, which is the regulatory clarity.
That cannot be overstated. After years of that cloud hanging over it, the Ripple SEC case is resolved. We have legal confirmation that XRP is not a security on secondary markets.
And that is the green light for global institutions.
The ultimate green light for long-term adoption, yes.
So we've got this massive tug of war. For you, the listener, trying to track this,
Mm-hmm.
what are the key levels, the key signals you should be watching to see when this downtrend might finally be over?
Okay, so the immediate level to watch is the October low of $1.77.
177, okay.
That's where the whale bids have historically been sitting. If that level fails, then you could see a cascade down to the 150, maybe 140 range, and that would signal a much deeper correction.
And what would a reversal look like? What tells us the bulls are back in control?
It's pretty simple, really. The downtrend only truly ends if XRP can reclaim both the 50-day and the 200-day EMAs. You'd be looking for a future golden cross to confirm that trend shift.
And on the institutional side, we just have to keep watching the ETF.
Absolutely. Keep an eye on those inflow numbers. I think if a Canary XRPC breaks, say, $500 million in AUM, that level of accumulation is probably big enough to start overwhelming the current market fear.
And of course, everything depends on the big boss, Bitcoin.
Always. That's non-negotiable. If BTC regains $100,000, altcoins will fly. If BTC drops below $90,000, well, expect more pain across the board for alts.
You know, this whole deep dive, this level of detail, is only possible because we can pull from these specific, high-quality sources. And honestly, we rely on your engagement to help us find and break down these big stories.
That's very true.
So if you're finding this useful, connecting the charts to the fundamentals, please take a second to like this deep dive, subscribe, maybe comment with your own thoughts. It genuinely helps support the show. boosts our visibility and lets us keep doing this kind of analysis for you.
It really does, and it helps us make sure you get the complete picture. We're balancing the very real technical warnings with that fundamental promise. The price, right now, it just reflects short-term mechanics,
Sell the news, the macro fear.
all of that. But the ecosystem growth, the record ETF, the billion-dollar stablecoin, the regulatory clarity, that provides an incredibly strong foundation for the future.
So what you're watching in real time is this temporary, but yeah, painful divergence between the current price and what might be the asset's intrinsic value.
Precisely. You're seeing exactly why the short-term chart can dictate the narrative, even when the long-term utility is absolutely booming.
Which I guess raises one last important question for you to think about.
Hmm.
Given this powerful, demonstrated institutional demand, that 248 million in AUM proves it's real, how long do you think it'll take for that institutional buy to finally overwhelm these current market forces and push XRP back towards its old highs, something to mull over as you process this deep dive?